Your mobile phones must be flooded with statements like FED in trouble, Trump demands Lisa Cook to step down. But what is everyone talking about? And what does this all mean? Hello and welcome back to Today in Finance. In this video, we're diving deep into why the US dollar fell right after Donald Trump demands the Federal Reserve Governor Lisa Cook to resign. We'll explain what does this all mean for markets, how investors are reacting to this, and most importantly, what could happen next. So stay tuned because by the end of this video, you'll have a clear understanding of why politics and central banking are colliding once again, and what does this mean for your money. So let's get started right away. The news broke out when Donald Trump, in one of his fiery comments, demanded the Federal Reserve Governor Lisa Cook to step down. He criticized her policies and claimed that she was weak on inflation and bad for the US economy. Almost immediately after his comments, the US dollar index slipped and investors were left worried about what this political pressure on Federal Reserve could mean for the future monetary policy. Lisa Cook is one of the more recent additions to the Federal Reserve Board, confirmed back in 2022. She has often supported a careful approach to interest rate hikes, balancing inflation control with economic growth. Trump, however, has had a history clashing with the FED. During his presidency, he repeatedly attacked Jerome Powell, accusing him of keeping the interest rates too high. Now, with Cook in the spotlight, it feels like history is repeating itself. The fall of the dollar wasn't random either. Whenever political pressure hits the FED, investors start worrying that decisions about interest rates might be influenced by politics instead of pure data. And that type of uncertainty is definitely toxic for markets. Confidence in the US dollar depends heavily on the idea that Federal Reserve is independent. If investors start to believe that FED governors can be forced out or intimidated by political figures, they will lose faith in the stability of US monetary policy. Traders reacted quickly by selling their dollars and shifting to other safe currencies like euro and yen. And all of this created an immediate dip in the US dollar index. The impact spread across various financial markets. For example, in currency trading, the dollar weakened against most major currencies like the yen, dollar, and British pound, making them more stronger in comparison. While in stock market, the reactions were mixed. Technology companies benefited a little because a weaker dollar usually helps US exports. But banking stocks took a hit as confidence in US monetary policy slipped. In the bond market, yields fell as investors rushed towards safer assets like US Treasury bonds. This was a classic risk-off reaction where investors prefer safety over political and economic uncertainty. And the ripple effect was clear. One comment from Trump set off a chain reaction across global markets. A weaker dollar doesn't just impact Wall Street. It eventually shows up in everyday economy. For ordinary Americans, the biggest effect is on prices. When the dollar falls, imports like electronics, clothing, and food all become more expensive. This can push inflation higher, meaning that everything from your grocery bill to your next car purchase will cost more. Travelers also feel the difference. A weaker dollar makes foreign trips pricier since you get less value when exchanging dollars abroad. For families planning vacations or students studying overseas, this adds up quickly. For investors, the impact depends on what you own. Stocks of big exporters like tech companies often benefit since a weaker dollar makes US products more competitive globally. But if you hold assets tied to imports, such as retailers that rely on overseas supply chains, those companies may struggle. Commodities like gold and oil often rise when the dollar weakens, which can benefit some portfolios but hurt consumers at the pump. Businesses are caught in the middle. Export-heavy industries like agriculture, aircraft manufacturing, and technology often gain because foreign buyers can afford more US goods. But companies that rely heavily on imports, from automakers sourcing parts overseas to retailers filling shelves with foreign-made products, face higher costs that may be passed down to consumers. In short, the dollar's movement affects everyone, directly or indirectly. It's not just a finance headline, it's something that shapes prices, investments, and even the strength of the US economy in global trade. The bigger issue here is not just about Cook. It's about the independence of Federal Reserve itself. The FED was designed to stay separate from political influence so that it can make tough decisions based on actual data and not elections. Trump's demand for Cook to resign has sparked serious concerns that politicians may increasingly try to interfere with central bank decisions. If markets start to believe that the FED is no longer independent, it could shake the entire US financial system, and this is the top reason why the US dollar fell. If Lisa Cook resigns, this would send shockwaves through financial markets. Investors would see it as a proof that the FED can be pushed around by political figures, which would severely damage confidence in the institution. The dollar would likely weaken further, and global markets might start pricing in more instability for US monetary policy. Such a resignation could also encourage further political attacks on other FED members, making the central bank's job even harder. If Lisa Cook stays, remaining in her position would show strength, but it would not end the controversy. Trump and his allies may continue their attacks, keeping pressure on her and the FED as a whole. Investors would remain uneasy, knowing that political interference hasn't gone away. Markets might stay volatile, reacting to every new headline about Cook or Trump's comments. How the FED might respond. Jerome Powell and other FED leaders may feel compelled to defend Cook publicly, stressing the importance of independence to restore market trust. The FED could also try to reinforce its credibility by sticking closely to its data-driven policy path. But even strong words from Powell may not fully calm markets if political noise keeps growing louder. What investors will watch? The next FED meetings will be watched even more closely than usual. It's not just about interest rates anymore, it's about whether politics is creeping into the decision-making process. Investors will look for signs of unity within the FED as well as any hints that political attacks are influencing their tone. Every word from Powell or Cook will be under the microscope, meaning volatility could stay elevated for weeks. Now, the big question is whether Cook will resist the pressure or if politics will win another victory over central bank independence. If you want to know what happens next, make sure to subscribe to my channel because I post a video daily on what's going on in the financial world. And you surely would not want to miss that. So stay tuned until next time.